All right, guys, welcome back to the channel. Took a little time off. Just been following the news, obviously, what's going on in Ukraine. I haven't been just kind of locked into my routine like normal, which is going to the gym, reading, stock market. I've really just been watching CNN and Fox and other news on YouTube and such, kind of nonstop, just following it. But wanted to get on here and do a video today and wanted to showcase an option play that I made the other day. It came actually from my close friend and Seeking Alpha writer, Logan Kane. And it was something that he was looking at and mentioned to me. And it's regarding the stock Robinhood. So here's what I did with that. So let's jump over here. Here we go. So you can see on the 17th, I sold one hood, April 29th, 2022, 12 put, and I took in a premium of $1.0934. So basically, Robinhood, and we can see, I think it's trading in the 13s right now. Logan conveyed to me his thought that it's really fallen dramatically, and that he feels that 8 might be a floor for it, just based on its cash holdings. So what I decided to do is kind of run my version of what many people call the wheel strategy, and what I've termed ping pong, which is basically selling puts with the idea of them either expiring worthless, or if I'm put the shares, to sell the call. So in this particular situation, the best scenario would be on April 29th for Robinhood to close at $11.99, and I would subsequently turn around and sell the 12 call for the following month. So that's kind of the idea. Now, look, if it stays in the 13s, 14s above that, then it expires worthless, and it's a free $110. So that's just kind of how it's structured. But more importantly, and I think this is a testament to my philosophy on investing, and the principle of compound interest and compounding, is you can see here this 109.34 came off, and it immediately went in and picked up $100 of ManuLife at $20.17. So almost a 1-for-1. I guess about a $9 difference. And I've done this really throughout my whole time selling options. To me, it's just is as important as what you do with the capital as the capital garnered from the premium itself. And so that's how I've been able to just really expand my empire, expand my fortune, with reinvestment of dividends, obviously, but reinvestment of option premium. And this is it's a small example. I mean, it's $100, so it's not tons of capital, but it just gives you a sense, the idea here. Now, what's the worst case? The worst case is that Robinhood collapses from 12, let's say, to 5. And then I'm forced to pay $12 for a stock that's trading at 5. But more importantly, the damage there, the issue is I wouldn't be able to run the wheel strategy or the ping pong, meaning I wouldn't be able to then take that 5 and like I could sell the 12 call. I'd have to either sit on my hands at 5 and hope it comes back into maybe 8, 9, 10, where I could sell the 12 call, or take a loss and move on, or again, just kind of sell there, and so you could either kind of wait, see if it recovers, sell at the 5, or try to maybe then sell a call at 7 or 8 and hope it doesn't get called away, and you could close that position. So you can play it a couple different ways if that were to happen. But let's take a look now at ManuLife. So this is, I came across this on Seeking Alpha. There's a writer on Seeking Alpha who I like, Brad Thomas. He generally does a lot of REITs, and you can see here it's price to earnings 7.38, dividend yield 5.02%, '08. So this is a Maneosian. For those of you who want to know what that means, it's basically where the ratio um, between the price to earnings and the dividend yield is equal to or under 2. So, for example, this would be a Maneosian if it were like even this P were 10 because it's about 5 even here. And then a super Maneosian is again if this PE were, let's say the dividend yield were 7.38 and the PE were 5.08. So there would be when the dividend yield is greater than the price to earnings. So you look at Seeking Alpha, its authors buy, Wall Street buy, its quant as a hold. It's got some good ratings, and you can see here. Here is the Brad Thomas article where I came across it. And then also put it into Fast Graphs. Fast Graphs is a software that I really love, especially when I'm looking at value-oriented stocks. You can see here, it's the black line is well below both the orange and the normal PE of 16. It's showing here, 7.8. Chuck Carnival likes a earnings per share yield over 6.5. It's at 12.82. Dividend yield, it's showing a little lower here at 4.33, but still, well in the Maneosian. And so, yeah, I mean, this is what Benjamin Graham would call margin of safety, so to speak. And you can see there's been there's been a margin of safety for a long while. So then the question is, well, is it a value trap? That's the question you have to look at in situations like this, where if it's trading under its normal PE for a long time. So what you can probably do here, this is the max. Let's go like 10 years. And see if that does. It's still, so it's not as undervalued when you look at the 10-year, see? And then if we even go 5. But it's a great dividend payer, low multiple in a market that many feel is frothy. So, in the 5-year, it's just a little bit slightly undervalued. The 5-year multiple is 8.23. And then we go out max again, and there we go. So you can see that significant margin of safety. So that's what I did. Sold that option, took the premium, bought ManuLife, and this is just again part of my investing philosophy of just compounding. And speaking of compounding, let's take a look overall. You guys know that I run about $1 million in the Maneos compounding machine, a couple different accounts. Alpaca, which is through Composer, Interactive Brokers, and TD. TD has the most amount of capital right now, with Interactive coming in at 3 and change, and Alpaca 130-ish. So you can see yesterday was about a $20,000 day. Today about a $9,000 day. And I was looking at this earlier and I think, wow, if I hold this account, for 10, 15, 20 years, it'll be just kind of fascinating to look at. Kind of like when you look at the expanded photo of the Dow Jones or the Nasdaq or the Nasdaq 100, S&P 500 since inception, because you're really able to point at the down and say, oh, this was 1987, or this was 1973, this was 2008, this was 1999, the tech wreck, this is COVID. So like just on this, it's a smaller version of that, but you can see COVID here, 363 down to 203, and then you can see the Russian-Ukraine war of 2022. I don't know the exact invasion date, but you can see it at February 10th. Capital in this account was 612, and it went all the way from 612 to 522, so almost a full $100,000 bout of volatility. And then you can see that we've had a couple rallies from the 522 up to 570. This is yesterday 560. You can see we're at 570 today. So yeah, just obviously volatility with what's going on between Russia and Ukraine. Hopefully that gets solved soon. Yeah, I mean, it's just part of investing. COVID, war, who knows what's next. So yeah, so that's just kind of a short video. Wanted to come on and just showcase that Robinhood option play. Any questions on the wheel strategy, the way I run it, or anything with options, feel free to write in. I actually had a viewer message me thanking me for the AppHarvest mention. He picked that up, I think, in the threes, and it's basically doubled. I think it was in the sixes today. So that's something I'm interested in, not from kind of like a Graham Dodd, Buffett, Munger, Pabri. Let's look at the fundamentals. Let's look at the analysis. Let's look at the, is it a value oriented decision? That's something, a passion of mine is farming, gardening, and I'm really recently I've looked into like what the Dutch have done. Just so you guys know, if you follow that industry, the Dutch are the #2 food exporter in the world, and we're the #1. But we have 217 times the landmass of the Dutch, and the Dutch have been great traders going back to the Dutch East India Company, um, and specifically with agriculture, with flowers, with vegetables, with seeds, and then with the agricultural technology. And actually, it's Dowsem, the Dutch company, who built AppHarvest's greenhouse for them. So Dowsem, Kubo, and there's a couple others in that field that really are like into the greenhouse technology. So again, this is something I don't know if this is going to be the MySpace, or the Facebook of that industry, but I think that the Dutch technology and controlled environmental agriculture is going to be part of the future. And so just a personal interest of mine, if you will. So meaning it could it could go back to three. It could maybe not work out in the long run, but it's a passion of mine, and I'm invested my capital there. So anyways, guys, that's it for today. Appreciate all the feedback. Take care. Ciao.